The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Hey traders, Stacey Burke from Stacey Burke Trading. Today I'm going to be reviewing a couple of concepts. I'm going to try and do an extended video that I'll put inside of the course, the playbook, and hopefully be updating some material very shortly. But I want to review some things today that will hopefully cement things a little clearer. Now, we've talked about the importance of other time frame traders, the 3 levels that each and every trader has every day when they come to the markets. And I talk about when the week starts on our Monday, that price begins to auction from our closing price level. Now we can see markets pump up and expand the range on the upside. This could be a Monday. We can see the markets dump down on a Tuesday and expand the range on the downside. And that can create our initial balance. That's one type of scenario, a day 1, day 2. We can see a market that stays above closing price on our Monday and breaks higher on day 2, making higher highs and still be above closing price level. But eventually that will form a box, whether that's a Monday, Tuesday, Wednesday box that gives us a lower low for a potential pump and dump opportunity that's a 3-day setup. That's one type of scenario. This could also be a 3-session setup. Asia, London makes a lower low, and then the US session goes parabolic on a day, a 3-session setup. The playbook, we talk about opening range, initial balance, news calendar, the importance of avoiding major red news. We'll talk about that briefly as well. 3-day setups, first green day, first red day, inside days, 3-session setups, and day 0 setups. A day 0 setup is an opportunity that can present where we have a box that forms peak formation high, peak formation low, consolidation inside for a potential range expansion opportunity that is a measured distance of that larger template. This is where we're targeting asymmetrical risk reward. We could be risking 15 to 20 pips depending on what you're trading, and targeting 50, 100, 300 as we saw today on gold for that measured move opportunity, whereas gold today kept going and expanding the range for well over 300 pips. So we've talked about first green day, we can get an opening range, an initial balance, an inside day that forms a first green day that could also then become a breakout that breaks out maybe in the Asian session or continues in the London window, breaking out of that geometrical structure. And you can get a range expansion depending on the session that you're trading, as we may see this market move in a range expansion, but it may not offer a trade opportunity in the US window as we are still on the front side of this move. We can see markets form that day 0 template or a box over the first 2 or 3 days. We can have an inside day in there as well. And we may eventually see a market make a higher high and pull back, a dump and pump template for a range expansion. We can see a market pump up and break down, forming a first red day for another potential parabolic collapse and breakout of a larger geometrical structure. Again, this larger structure is where we can target asymmetrical risk reward. So again, we're
accelerating into the move in a range expansion, and these are the types of situations where traders can get caught trying to counter trend a market that is now going on a measured move range expansion. We've talked about day 3 longs in the market, day 3 shorts, first red day, first green day, the inside day. Parabolic trend trades, 3 session setups, parabolic short squeezes, low-hanging fruit, and first bounce opportunities. We will look at some examples of those specifically from this week. Now, just to review the weekly template, Monday is day 1. That is the opening range of the week. Tuesday is day 2. Wednesday is day 3 and the midpoint range of the week. Day 1, day 2, day 3. That resets and becomes our new day 1 heading into our closing range of the week. Thursday is day 2 and Friday again is day 3 and the closing range of our week. So Thursday, Friday can establish the boundaries as we head into our new week. So each instrument's going to have a different type of template. My job as a trader is to find the template that offers me the best setup and the best daily setup template on the day in the session that I'm trading. And as I've mentioned, 90% of my trades are in the US session. But this week we had some fantastic opportunities in the Asian session, which we will look at today. Reminding traders that there are some simple parabolic opportunities in each of the 3 sessions as we get to our day 3 on Free Cash Friday, looking for that closing range of the week to potentially offer us some larger parabolic opportunities. And today was the first day of a new trading month. Again, reinforcing the importance of timing from the playbook, the beginning of a new 15-minute candle, the beginning of a new hourly candle, a 4-hour candle, a new day, a new week, or a new month, and of course, a brand new year. These are all significant timing cycles. Obviously, the larger macro cycles are very important. Today, the beginning of a new month, which is a new timing cycle. I get my major economic red news from Forex Factory, which you can just go to forexfactory.com, and that shows us what's on major news release for the calendar for the upcoming week. And you can potentially map out your week for where we're going to end up on Friday, and we can see how some potential currency pairs or cross rates will play out in relation to major red news or potentially offer us opportunities, as well as on the indexes, gold and oil, depending on what type of news is on the calendar. I just want to remind everybody that these levels are what every trader has coming into the new day. Now, people have asked me, what is the reference point for closing price? Well, Friday, 4:59 p.m. New York time is the closing price time. Now, I know that some markets, the indexes close at 4 p.m., but there'll be a closing price in most cases, specifically at the 4:59 p.m. level. But regardless, the significance is having that level when the new week starts, and that's where price will begin to auction back and forth from over the course of the week. We can get markets that will trade lower, and that level can act as a magnet. Now, sometimes we'll see a range expansion, perhaps on our opening range. We may see Monday pump up and close up higher, and the market can continue higher. That closing price level can be significant, but so is the weekly level. As the market trades, as it begins its new trading in the new week, this is the reference point that everything starts to work back and forth from. So when I make the comment to traders about not chasing candles, understanding that until we get our bigger box set up for either selling or buying, if we indeed have a setup, this level is what is paramount in terms of what the market is establishing our boundaries from in the new week. In the absence of major red news being on the schedule, these are the starting times for these instruments and their markets. So we have currencies in gold and bonds beginning at 8:20 a.m. Crude oil 9 a.m. and the New York equity markets 9:30 a.m. And what that means, what the Fugazi means, is that I don't view anything except my 3 levels. And when these markets open, if the markets have broken outside of those levels and they open outside of those ranges during these times, then I refer you back to Dalton, Mind Over Markets market profile, understanding when a market opens outside of the previous day's range in those timing windows. Now, if we have major red news on the calendar and it's after those opening times, that major red news, timing is specific for me to begin my day. I don't trade before the news. I am not in the market during news. And that goes for any type of major red news. So I refer you back to Paul Tudor Jones's quote, always think of your entry point as last night's close. Now on a Monday, the last night's close is the previous close of the week. And if we are looking for a best trade candidate, it's a 3-session setup. In most cases, I want it to involve other time frame traders on a Monday, which means that we will have broken or traded to or through one of the previous day's high or low levels. On Monday, traders had a best trade candidate opportunity on West Texas oil. So remember, again, we have our closing range of the week, which is our Friday. Pink line is our dividing line between Friday and Monday. We've traded below closing price level on our Monday. We'll zoom in on this a little bit closer. We've broken outside of the previous day's low of day boundary. That's our blue dotted line. The green line is our closing price level. And we have a market that opens up at 9 a.m. New York time, which is our candle just to the right, our 9 a.m. engulfment. We can put our universal EMA on here from the playbook, and we would be targeting asymmetrical risk reward from closing price to the expanded range low of day for at least 100, or if the market continues to run, a 200% expansion of the range as a potential profit target. If the market hasn't got there or it starts to extend in the timing window, we can always follow this up with a trailer to take us out of the market as it approaches that level. That's a Monday best trade candidate, a 3-session setup. And you'll also notice if we back this chart up, we have a closing range that started on Thursday, which gives us a 3-day template for a parabolic reversal best trade candidate on Monday, Free Cash Monday. Now on Tuesday we had major red news at 8:30 and 10 a.m. Durable goods and consumer confidence, 8:30 a.m. and 10 a.m. New York Index is open at 9:30, and that is plenty of time if there is a best trade candidate to either have a nail and bail opportunity or to potentially be in a move that can capitulate prior to the news, or a currency opportunity if indeed it presents. Now the DJ30 gave us a first red day on Monday. First red day on page 6 in the playbook, page 58 in the playbook, is a day that closes below the open after a peak formation high has been made. Now occasionally we can have an inside day that gives us a first red day, but it will coincide with a pump day. The main thing to understand about a signal day is that it merely brings our attention to that instrument, and then how does price set up on the day. So first red day is a high of session, high of day selling opportunity if indeed it presents. And on Monday we had a first red day that made a peak formation high. Now remember what I said about closing price of the week. The price auctioned above closing price of the week. Monday is our new week, our new first opening range of the week. We traded underneath of that closing price on Tuesday before breaking down the current, before the New York session opens, below the current closing price of Monday. So we made a lower close on Monday. That's a first red day signal. We've pumped up prior to our U.S. session opening. We've broken down below closing price and consolidated. But I want to bring traders' attention to a couple of things here. Again, Paul Tudor Jones's quote about a range expansion. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Paul Tudor Jones. Friday is our closing range of the week. Monday is our opening range of the week. And our closing price on Tuesday is also below Thursday's closing price. And we have 3 days of volume trapped. So I mentioned earlier today, we have Monday, Tuesday, Wednesday, 3-day setups. We have Friday, Monday, Tuesday, if we have a 3-day setup, potentially setting up on a Tuesday, day 2 in our new Monday, Wednesday, Friday template. If we put our universal EMA on here, we are inside of our universal EMA. This is a 15-minute chart. Now, if traders enter this trade at the open, at the low of day level, remember timing's levels, behavior of price. On the close of the second candle, this is a 5-minute chart. This is a 75 pip move in 10 minutes on a capitulation on day 2. So I wanted to point out, referring to Paul Tudor Jones, we're on day 2. We're expanding the range. We have markets that are indicating to us that they are potentially going to expand the range. It's a first red day trade setup for a range expansion. And if we back our timing up again, we have Friday, Monday, Tuesday, a 3-day setup blowing off in the direction of that creep. A first red day signal at the New York Open and out of the market. Minimum of 75 pips prior to major red news. Obviously, if traders stayed into that market and held on to it, there was more, but they also run the risk of a market potentially maybe spiking back up. So in my perspective, my approach to the markets is to be out of the market with the money locked into my account prior to major red news. First red day trade on Tuesday for a easy, free cash, stress-free opportunity on the Dow Jones 30. If we had projected a range expansion as a potential target prior to major red news, it still took us out approximately at the same level for a 100% expansion of the range. That market continued to do a second full expansion on the news release, but out of the market in 10 minutes with 75 pips in a first red day coil for a parabolic explosion. On Wednesday, we had major red news at 8:30, prelim GDP. On Wednesday, we had a high of the week, third hour reversal, 1 hour after the 9 a.m. open on West Texas or spot crude. This is a 3-session setup, and even with our 15-minute chart, we just have an engulfment. We're out of balance when the market opens up at 9 a.m. The market opens and goes higher, and you'll notice we have 1 hour to the high before engulfing, and that starts our new 4-hour candle. Oil opens up 1 hour later, and our 4-hour cycle starts at that 10 a.m. rotation. We have an engulfment, a 1-bar stop, targeting back inside of the range to where breakout traders started at 8 a.m. And you'll notice again the pump and dump template. The move that started from the lows of London is a breakout, pullback, continuation to the high. So this market is broken out on Tuesday, pulled back to that level. And as I mentioned earlier this week, traders will also notice that that level on day 3 coincides with 50%. And so there were opportunities on the front side of that move at the beginning of the 8 a.m. hour for traders that were looking for that opportunity. This is a 15-minute chart for the parabolic explosive move to the high of the week. So backing this up, stair-stepping again, day 1, day 2, day 3, blowing off in the direction of the trend. A day 3 parabolic blow-off and a day 3 3-session reversal at the beginning of the new hour and the new 4-hour timing cycle. And if we zoom in on our 1-minute chart, once you understand the importance of timing and the levels and the fact that this market is now out of balance and we're on day 3, we have front side and we have our backside beginning of that new hour. We're on a smaller time frame. This market is now breaking down at the beginning of our new hour. Lower lows, lower highs, coiling inside of our EMA underneath of the breakout level. We'll just highlight this again for traders. Lower lows, lower highs before dumping down to the high of day level and then pumping back up and coiling for an explosive move from the high of day level to the low of day breakout level, the 50% level again, where that move began. Now we had crude oil inventories on Wednesday at 10:30 a.m. So in my case, I would have stayed out of this market until after inventories were released. We're already breaking down. We've broken down to the high of day level. We have inventories being released at 10:30 a.m. And the point of staying out of the market until after these releases is that I have no idea what these markets could do. They could spike high, they could spike low, they can widen the spreads, they could do anything they want. Now, if I'm trading this market, how could I possibly have any size on that when there's about to be a major news release? So in my case, I wait. Our thesis is that we've already locked in the high of the day. They pump it up, pump it up, pump it up, and the new hour starts. The new hour starts and we're back inside of our coil at the high of day level in an already broken down market. After the inventories is released, we have a pump and dump template into the new hour for the easy collapse back into where that move started. No stress, no heat. After the news, 1 bar stop and an opportunity to potentially be adding in as this market's accelerating into that blow off move. We also had an opportunity on the DJ30 low of the week. I'll back this up onto our 15-minute chart. Day 1, day 2, our first red day short trade, and day 3 breaking out and expanding the range on the downside. New York Open blows off through the low of the week, taking traders down into the low of the week before engulfing, pulling back and jamming back down into the low of peak formation low level. Our new hour starts and we have an engulfment, a pin hammer, and then another pin hammer engulfment for our entry back in a short squeeze parabolic setup, back not only through the high of the session, the first hour session, but into lower level shorts from the London window. If we just drag this across, in my situation, I just take a projection of the high and the low as a potential profit target or the level that is hit first. The lower peak formation highs that London makes on the way down are areas where this trade can fail. And new timing cycle as we get towards the end of the hour, locking in the profits as this trade has hit the high of the session and cleared out those lower level shorts. But an excellent reversal opportunity. Session 3 session setup. New York Open after major red news for a parabolic reversal trade on the DJ30 on Wednesday. Looking at the Japanese yen, and as I mentioned earlier in the video, I talked about the closing price of the week. So again, this is our Monday, Friday dividing area. As the week opens, we auction around closing price. The market establishes the opening range. We have a range expansion on the upside. And on day 2, the market auctions down and puts a lower low on the downside. So we now have our opening range and initial balance. We've expanded the range on the upper portion of our Friday's closing range. And we've expanded the boundaries on the lower portion of our opening range, as well as Friday's closing range on the downside, a higher high and a lower low. That lower low now acts as a pump up into our Monday's closing range level. So our closing range of the week is our starting point. Monday has put in a ceiling, if you will. I call it a ceiling because price auctions up into that level. And on Thursday, we have a fantastic opportunity for the short trade in the Asian session. A 3-day setup, a pump and dump template for a range expansion target on Thursday's Asian session. When we have a market that is offering us that range expansion opportunity, we can project that consolidation high-low level. The volume above Tuesday's closing price now can act as a neckline for trapping volume up top into our high of the week opening range level for a range expansion opportunity, a parabolic range expansion opportunity in the Asian window. Now, several Asian pairs offered this setup. This is the Japanese yen. You can go back and look at the same types of opportunities, but this is the larger template, day 1, day 2, day 3, a day 0 opportunity, peak formation high, peak formation low, lower lows. We expanded the range on the upside, expanded the range on the downside. We now have a pump and dump template coiled into the open of the Asian session. So for traders that are savvy and they recognize this template forming and they're trading the Asian session, this is a fantastic opportunity for a parabolic trade setup that is not coming back in that session. Now, this pair also offered us low-hanging fruit trade after major red news at the New York Open, as did the other pairs. In retrospect, some of the other cross rates offered a much cleaner opportunity for the low-hanging fruit. And of course, this pair offered a reversal trade in the third hour, taking back the low of day level and going parabolic in the Asian session. We're going to look at a couple of different scenarios that occurred with these pairs. But the parabolic blow off, again, looking at the larger template, understanding that the weekly closing price level, we are underneath of that when the Asian session opens. Remember the three levels that everything works from. Traders are looking at candles, everything else. Look at the larger templates for these asymmetrical risk reward opportunities. I'll point this out. This is a 1-bar stop. This trade offered traders significant return on risk with almost zero probability of this trade coming back. The pound yen is another pair, just in similar. We'll just look at this briefly, point this out to traders. So again, we have our opening range. If we just back this up, we triggered highs, longs at the opening range, triggering highs of the closing range high. But if we take our closing price now and project this across, we had an inside day on Tuesday, inside day, lower lows on Wednesday, day 3, lower lows. Remember, these are not failed breakouts. We have not taken out the other side of the range. Lower low is a range expansion, offering us a pump and dump coil for a parabolic move underneath of the closing price of the week. So again, recognize that this is an auction level, establishing our boundaries, creating a larger consolidation box. Price is always in a box. These are the types of opportunities that I'm targeting when we get our range expansion opportunities that we can project profit targets to for those breakout trade opportunities. On Thursday, we had a great low-hanging fruit opportunity after major red news. 8:30 a.m., we had Canadian GDP. We also had core PCE and unemployment claims, 8:30 a.m. New York time. Now, this market had pumped up Monday, Tuesday. Wednesday moved higher. We're at the high of the week level on Thursday. When our U.S. session starts, we have major red news at 8:30. So waiting for after the news, heading into our New York window, traders had the opportunity for a low-hanging fruit continuation trade. Low-hanging fruit, page 96 in the playbook, a trend continuation opportunity. On our 5-minute chart, we have a 10-11 pip stop, targeting 40 to 45 pips, a profit target, zero heat, no stress. A low-hanging fruit continuation trade on the reversal on Thursday. Day 2, 3-session setup. So we have Asia, London, and New York blowing off on the major red news, pulling back into our New York Open for the easy collapse on New York Open. And that brings us to gold. This is a 30-minute chart, and I want to point something out to traders that regardless of the time frame, so traders are always asking me, how can I trade a 4-hour chart because I can't check the charts? How about can you show us a daily system, an hourly system? These levels are the same no matter what time frame you have on the chart. I could have a 1-minute chart, an hourly chart, a 4-hour chart, a 30-minute chart. But closing price, high of day, low of day, high of week, low of week levels are the same. They don't change because of the time frame. So I want to impress upon traders that it's about the template and the type of setups, not the time frame, the levels, the timings, behavior of price. So if we come back to our original template, Friday's the closing range of the week. Monday's day 1, the opening range of the week. Tuesday's day 2. Wednesday's day 3. And that resets and becomes a new day 1 heading into our closing range of the week. So our closing range establishes boundaries potentially in our new week for our opening range and those templates. Now our closing range on Friday established a peak formation low and a peak formation high that was an outside day. That creates a day 0 potential template. That's the peak formation high, peak formation low consolidation opportunity. Day 0, page 84 in the playbook. Now you've heard me reference Peter Brandt. The purpose of me looking for these larger geometrical structures is because of the classical charting range expansion opportunities that those, when they present, those types of opportunities present, offer us asymmetrical risk reward range expansion profit target opportunities. So coming back to our original thesis, closing price starts the auction process off for the week. Our opening range is an inside day on Monday. The market makes higher highs on Tuesday, our day 2. As Paul Tudor Jones says, when you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. When I mentioned to traders, don't get caught chasing candles, look for the setup, I'm referring to the larger geometrical structure, not chasing movement of these candles. Closing price of the week is where our auction process begins. We've established our boundaries after Monday. The opening range and initial balance are in place heading into Wednesday, day 3, which is why I emphasize the importance of the opening range and initial balance for every instrument, not just gold. The same setups will apply on any instrument at varying times whenever. But when these types of opportunities present, they can offer us very, very significant risk-reward opportunities. We have a market now that has broken higher above the opening range on day 3 on our Wednesday with a parabolic opportunity for London session traders. Again, a session opportunity. And then we had a first bar trade on major red news on Thursday, on our news catalyst opportunity on Thursday. So I want you to go back and look at this closing price level again beginning the week. We have gone down to the low of the week. We've closed now above the range from the previous day. We've auctioned lower, down first. We haven't taken out the high of day level. We've dumped it down prior to major red news. Our first bar candle traps volume. Remember the 4 types of candles that I talk about? We trapped all this lower level of volume on the major red news release, core PCE. We had higher highs on day 2 on our initial balance. That higher highs above closing price. We are now closed above closing price not only of the day, but of the Friday closing price of the week. We have a news catalyst momentum opportunity, and if we project closing price from low of day, that can give us a range expansion profit target. In this particular case, we can use the closing price of the week as a potential target. If we do not get there, as this trade reaches that timing window expiration, we can be looking to lock in the profits. This is a news catalyst opportunity coinciding with closing price and our larger template, day 1, day 2, day 3, coiling into a news catalyst opportunity on Thursday, day 2 on the backside. Heading into Friday, we had major red news coming out at 10 a.m. on Friday, but we now have a market that's broken out of a consolidated ascending triangle from the Thursday news catalyst heading into our free cash Friday. We've broken higher in London, dumped down in Asia, open of the Europe session, pumped higher. We now have a market that is making higher highs and higher lows. That is a parabolic template heading into our U.S. session. So prior to our 10 a.m. news release, we have a market that's broken out, and 9:45 a.m. we have a news catalyst, orange news, that's taken that trap volume and collapsed vertically, and then the explosive 10 a.m. News candle that goes back inside the high of day level. So we've got a market that has pumped up, broken down, and now establishing a dump and pump template. Dump, coil, explosive move. After major red news, we'll blow this up in a moment, we have a first bounce opportunity coiled inside of our EMA in a dump and pump template in a larger range expansion opportunity in a parabolic coil. Now, if we zoom in on this, traders will see that even if we go to our, we'll just show the first bounce. The first bounce is inside of our EMA. This is 9 minutes after our major red news. So when you understand the template, the larger opportunity, the timing, after the news is released, it's all systems go. We're back inside of our EMA. We are now targeting a potential move, a minimum back to the high of the day, but potentially now also a range expansion opportunity. As I mentioned to traders, on 5-minute chart, we also had a first bounce. So time frames are relevant if you understand the big picture. You can have the confidence to be entering in and adding into this as this market now is going on a potential range expansion, even at a minimum of the high-low consolidation from that high of day, low of U.S. session consolidation rectangle, as we are now on top of the high of the day, targeting a full range expansion of that move. So an incredible opportunity. Every single day this week we had excellent opportunities, and there were multiple others. But in the interest of time, just pointing out, sticking to the basics. I'm looking for the opportunities that will present for a range expansion opportunity, whether we go for a 100% move, Free Cash Friday, where we're targeting geometrical expansions for asymmetrical risk reward, and understanding the difference between chasing candles and scalping gaps and catching pips and everything else. I'm looking for the larger template to set up for potential parabolic opportunities where I have a 90-10 best trade setup. Easy, low stress, rinse and repeat opportunities that show up again and again and again. And as I mentioned, traders, the more you step back, you wait for major red news to be released, stick to the rinse and repeat opportunities that show up, whether they're 3-session setups, 3-day setups for larger expansions, or just parabolic opportunities in the session that you're trading for nail and bail types of trades. But there are best trade setups in almost every single session, 4 to 5 times a week, for fantastic, scalable, parabolic opportunities. Keep it simple, traders. 1% better every single day. We'll expand upon this information, but I wanted to emphasize to traders that every day we had multiple opportunities for best trade candidates. Keep it simple. Do not chase candles. Don't chase price action. Focus on trading setups. Have a great day, and may the markets go with you.